Awesome, great. Thank you so much, Kat. Hi, everyone. I'm Priyanka, and with me is Laura. Both of us work at GoDaddy on the online bookkeeping team. Between the two of us, we've been in the small business and accounting world for a long, long time. Laura particularly has uh, a long range of experience through her years at Intuit and then also at Outright, which some of you might remember from the years past. Outright got bought by GoDaddy, and now we're GoDaddy Online Bookkeeping. So that's a little bit about us. We would love to get you started talking about taxes this year. So
Here we go. Welcome,
here we go.
everybody. We're ready. Thanks. We're so glad that you're here at another Top Rated Seller webinar. And of course, as Priyanka was telling you earlier, today's lesson is Tax Time Crash Course for eBay Sellers. This is presented by Laura Uribarri and Priyanka Sharma. And we're so glad you guys are here. A little bit of housekeeping like you haven't been through enough. The webinar is being recorded. We promise we'll have a nice cleaned up version for you to watch as soon as we can. The presentation slides will also be available as a PDF on the pagemage.com/TRSW page. If you're having audio problems on the computer, you can always try calling in on the phone. If you're having problems on the phone, the best idea is to hang up and try it again. Where have we heard that before? We would really like you to stay connected to the Top Rated Seller webinar team. You can sign up for our newsletter at pagemage.com/Top Rated Seller webinars. Our newsletters contain webinar information, don't miss any, selling tips, and seller advice. It'll also give you the recording links to past webinars. We would love to have you on our Facebook group. We have a very, very active Facebook group, over 1,300 sellers and growing. Join us at facebook.com/groups/TRS webinars. Come join the conversation. On Twitter, you can join in by using hashtag TRSW. And please be thankful to our sponsors. Without them, we wouldn't be having this great series of profitable and intelligent webinars to help you learn to sell. Our sponsors are Social Beacon. Easily promote all of your items across social networks. Social Beacon is the only social media tool built just for marketplace sellers. Our other sponsor is Stamps.com, where you can import your orders from multiple marketplaces and create a postage place in your own PC. Our next sponsor is eBay Radio, where you've got the griff. eBay Radio airs every Tuesday and Thursday from 11 a.m. to 2 p.m., and the hosts are Jim Griffith and Lee Mirabal. Learn more about eBay from eBay Radio. We're also sponsored by Cabbage. Could you use a little cabbage for your business? Check out cabbagewithak.com and get started spending money to build your business. We are also sponsored by GoDaddy Online Bookkeeping. You probably heard of them as Outright.com. This is where you can pull all of your bookkeeping and expenses into one place. Beware of the spreadsheet. Move up to GoDaddy Online Bookkeeping. We're also sponsored by Terapeak. Terapeak makes more money on every eBay sale, and now there's Terapeak for Amazon. Check out Terapeak.com. Don't forget our connectors. That's the famous cat. That's me, that cat from thatcat.com, and Karen Locker. You'll hear her on our questions, solutions for e-commerce. We don't want you to miss our next webinar. That's why we asked you to sign up at our newsletter at pagemage.com/Top Rated Seller webinars. Our very next webinar is Fast Forward Social Commerce. It's not about likes, it's about sales. Presented by best-selling author John Lawson. Be sure to sign up. Wednesday, March 26th. And now I get to turn it back over to Priyanka and Laura to teach you about tax time for eBay sellers. Thanks, ladies.
Awesome. Thank you so much for that, Kat. That was amazing information out there for all our listeners. Now let's get started on cracking this tax time. So this is a quick and short disclaimer. Our lawyers made us do it just to tell you that use the right guidance that is available for taxes, and we are trying to provide informational material here. So in today's agenda, we will cover, we're trying to have a combination of topics that people can use even if they're just beginning with eBay sales, also all the way up to people who are fairly advanced and might have some complex topics to go through. We hope to cover as much as we can, and we're lucky that we have Kat and Karen here too for any complicated questions that arise. So we will go over who needs to pay taxes, the general details of filing the tax return, calculating the taxes owed, including deductions, and then handling the income from eBay, expenses, and a little bit about tax. We'll briefly touch on dropshipping and consignment as well. And finally, we will reveal to you how GoDaddy Online Bookkeeping can help in this tedious process. So the biggest question that often comes up for eBay sellers is this considered a business or a hobby? The main reason people think about this, as you probably know, is because hobbies are not taxed. The key rules of thumb here are, if you run the business, if you sell on eBay with the intention to make a profit, it's a business. If you've been profitable for 3 out of 5 years, that's a business. Finally, importantly, if you depend on the income for your living expenses, then it is a business. We highly recommend you to play it safe, and even if you make a profit of $1, just file your tax return on it. Along with just playing it safe, the big value that you have here is that you get a lot of cool deductions, which overall help with your tax returns. So when in doubt, consider it a business. So now that we've decided that you should be filing, the dates around this are, as always, the income tax filing is due April 15th. The main forms to note within the 1040, which everybody will file, is the Schedule C, which is for your income as a self-employed person. Here we're going to focus on it as the income you get from eBay. I'm sure you have other sources as well, because some might be selling on Amazon or even doing local orders offline, etc. Keep that in mind when you look at Schedule C. Here we will talk about it assuming that the eBay income is all that we need to discuss. There's also a self-employment tax, which is filled through the Schedule SE. Now, there is also the concept of estimated taxes, which I'm sure you guys have heard of. It's a fourth of your annual income tax given send off in installments. Usually, if you owe more than $1,000 in your yearly income tax, you need to file the estimated taxes. It's also good for you because you get all this done regularly and don't have this big surprise at the end of the year. So there are many ways to do it, and there are resources out there, especially Cliff Anico's book on dealing with which way to set aside money for estimated taxes. And you can look at those for more information on that. So the biggest thing to note when doing taxes is that you pay taxes on your profit. So profit is what money is left over when you remove the cost of goods sold and expenses from your revenue. What is revenue? Revenue is all the sales and any income you're getting from possibly any source. So as you can see here, the higher your COGS and expenses, the lower your profit will be, which is all good news from the tax perspective.
Great. So thinking about the common deductions and expenses, we've been talking to small businesses and helping small businesses with their taxes for numerous years. And one of the most common questions that we get is around deductions and expenses and what are things that people can actually deduct as a business write-off. So here's a list here of, we've got everything from the home office deduction to business travel to tax preparation if you use an accountant or you use TurboTax and you purchase that software, any advertising programs, basically anything that you use to run your business is actually you can expense, and then they have specific deductions that we'll talk about. But one thing to note, the IRS has some strict rules around how do you define actually what that is, and so they say that a business expense must be both ordinary and necessary in order for you to use it on your tax return. And by ordinary, they mean one that is commonly accepted in your trade. So for example, if you make or sell jewelry or antiques you know, and there's one big antique show that is the show for anybody who sells antiques in the, you know, throughout the year, and there's one major event or show, that is considered something that's ordinary and necessary as part of you doing your business, right? You need to be at that event to be able to keep on top of the latest trends and having the best inventory to sell. So it's things like that. They consider it ordinary and necessary to run your business. I'm going to dig into a couple of the most commonly overlooked pieces of deductions here for folks. So home office deduction. So there's actually 23 million small businesses out there that file a Schedule C every year. And of those, only 3.4 million actually take the home office deduction. Now, granted, not everybody is eligible for the home office deduction, but if you think about 23 million and 3.4, that's a pretty big difference in terms of there's a lot of people missing out on this home office deduction. And historically, people have missed out on it because it's really hard to calculate how to assess the home office deduction in terms of what portion of your square footage can you deduct. You have to do really elaborate calculations. And so probably one of the biggest differences that will impact taxes for 2014 or for your 2013 tax year is the home office deduction. They've implemented what they're calling the simplified option, and that is basically a flat deduction that somebody can take as part of the home office deduction. And that basically says you take $5 and you times it by the square footage area of your home office. And so the key here, though, is there's a $1,500 maximum. So your home office cannot be more than 300 square feet. And so basically the gist of this one is if you have a small home office or you just honestly do not want to deal with the calculations and all the square footage measurements and all of those percentages, the simplified option is certainly exactly that, a simple option that allows you to take the home office deduction. Where it gets tricky is you can still do the old method or the standard home office deduction if you have a really large home office, or if you use part of your, say, garage for inventory and it's beyond the 300 square feet, then it probably does make sense for you to do the standard deduction because you're going to miss out on you know, being able to deduct beyond that $1,500. So it's certainly a trade-off, but this definitely opens up making it easier for people to take the home office deduction. So this is probably one of the biggest changes for filing taxes this year. The other one that people miss out on a lot is taking a retirement contribution. So even though a lot of eBay sellers, you all work for yourselves and you don't work for a corporation or a big company that offers a 401k or retirement plan, certainly
Laura,
doesn't mean that. Yep.
Excuse me, Laura, can you hold on a minute?
Technology, not without its challenges. So retirement contribution, again, so this is an area, again, where you can contribute to an individual retirement plan, and they have several ones out there that are exactly designed for self-employed, and you can access most of them through your bank or a financial organization. They're different, I won't go into great detail, but basically they have about 3 different types of programs. One is a 401k, one is a simplified employee pension, the SEP IRA, and then one is a simple IRA plan. And so they have varying fees and various contribution levels, but as you think about your retirement, you certainly want to be contributing, and it also helps you with taxes each year. So definitely deferred taxes on that piece. Okay. Mileage deduction. So this is a big one that is often overlooked for people. So tracking mileage, it can be a little bit tedious, but this is actually, once you get the hang of it and once you make it a regular habit, this is actually something that is really worth doing. So basically, tracking your mileage, so the IRS allows you to track 56.5 cents a mile for this year for every mile that you drive for business. So if you think about all of the trips that you make to the post office or to sourcing or to flea markets, or all of the trips that you make, you know, to get shipping supplies for your business, those are all tax deductible. The tricky part here is the IRS actually requires that you keep a log. So in your log, you want to track the date, the trip miles, the location that you were going to, the address, and then the purpose of your trip. And so you do have to keep a detailed log, but you can pick up a mileage log at your office supply store and put it in your glove box if you prefer to do it that way. There's a lot of mileage apps that you can download that help you track it. The GoDaddy Online Bookkeeping mobile app also helps you track that. So there's lots of options out there. The one thing that you have to decide about when you track your mileage is, do you want to take the standard deduction, or do you want to take the mileage portion, which is 56.5 cents per mile, or do you want to actually take the actual expenses that you use for your vehicle, right? So the gas and the maintenance and any repairs, and then you deduct whatever portion of that you use for business. So again, like the home office deduction, that is a more complicated deduction, and for most small businesses, the standard mileage deduction of the 56.5 cents usually works out best. But again, once you decide, you have to decide which one is right for you and then track accordingly. Cost of goods sold. So the one thing about cost of goods sold to note here is, again, if you think about what you pay taxes on, you have your revenue minus your cost of goods sold minus your expenses, that equals your profit. So cost of goods sold is basically what cost of goods sold is how much you pay for the, quote, inventory that you're going to sell. And the key thing with cost of goods sold here is you can only deduct what you've actually sold. So here's a very basic example. Say in the beginning of January you bought 100 widgets and you paid $1 each for them. So in your inventory column here you now have 100 widgets, and notice there's nothing in the and then in the COGS column, it's a little off in this slide here, but you should have $100 in your cost of goods sold item, $100 in your cost of goods sold column. And then at the end of December, you did your inventory, and you have 25 of those widgets left that you haven't sold. So that means you've sold 25 of those widgets. So if you go to the next line down there, you see your cost of goods sold for 2013 would be the $75 of the widgets that you actually sold. You can't deduct the full $100 because you haven't sold all 100 of those widgets. You've only sold 75 of those widgets. So then you carry that $25 and those 25 widgets into your beginning inventory for 2014. So the other thing here is COGS is really a category of its own. It's not, it doesn't live in the expenses section. People get hung up on that too. So just a quick COGS example for folks to follow. Oops. There we go.
Awesome. Thank you for that, Laura. Now that we have a good understanding of deductions and expenses, let's move on to thinking about revenue. As an eBay seller, the primary form to really focus on when thinking revenue is the 1099-K, which you should have probably already received by now. This is a form that is sent to you by PayPal and to IRS as well, and reports your eBay revenue. Now, you get it if you are either making 20,000 or more in sales and have sold 200 or more items. So for example, if you sold one very, very expensive watch for $20,000, then you wouldn't get this form. The thing to know about this form is that it is basically gross revenue that it's reporting, which includes your shipping revenue, which you utilize to actually ship items, sales tax that you collected, any fraud that happens, sales that were eventually returned. So very gross. What it doesn't include is the examples of deductions, COGS expenses that Laura already went over. So you will need to make sure that you input those into your Schedule C for everything to be accurately reflected. This 1099-K form is really useful and important. It is a blessing. The most important thing to do is first look at the form and make sure that what you got from PayPal is accurate. Anybody can make mistakes, including big companies. So you want to be vigilant on making sure they sent you the right form. If you utilize an online bookkeeping solution such as GoDaddy Online Bookkeeping, that becomes really easy for you because all you need to do is go into your account there and look at your eBay report to see exactly where you're at. So that's number one. The second thing to do is look for expenses and input those into the form to lower your taxes, because if we remember, taxes are paid on profits, not revenue. You repeat the same thing in terms of deductions. Laura went over the most important ones that are overlooked, such as mileage, home office, etc. Make sure you take as many deductions as you can within reason, because you don't want to waste time dealing with the IRS because you were a little far-fetched on your deductions. So make sure on that. And then finally, you should double check all your gross receipts just to be on the accurate side of everything. It always pays to be too careful. This can be a fairly manual process, which is why, again, using an online solution can be really helpful, as we will show you towards the end of this presentation. So now that you have read it with the 1099-K form, here's another thing to keep, the biggest point to note with this, as it relates to you and your relationship with the IRS. When you get the 1099-K form, make sure that what it reports as gross income is same as what you report in your Schedule C in the number 1 box, which is gross amount of payment / third-party network transactions. This is critical because a mismatch in this will trigger an audit. Now keep in mind that you, as we discussed, might be making money from many different sources, such as Amazon, such as sales in offline in your city or neighborhood. You need to include all of that into this gross amount as well. So it's all right if your Schedule C number 1 box is more than the 1099-K, but it should never be less, because that would mean that you didn't actually make as much revenue as your eBay sales are being reported, which would trigger an audit. Now, something to keep in mind as you think about this is, what is the consequence of any errors here, right? So the IRS has a nuanced approach to this, and depending on the egregiousness, etc., of the error, you might get one of 4 letters. They're numbered letters, so 5,035, 36, 39, or 43. They differ in the severity. The first one, the 5,035, is the softest. It's just sort of a, hey, you might want to check your numbers. You don't even need to respond. The number 36 is where it's the same message, but they want you to respond in 30 days, having checked if there's an error. Then there's the 39 form, which is fairly serious because they want you to complete an additional form, 14,220, to verify that the numbers are accurate or make amends if there was an error. So that's a tough one. And then finally, there's 5,043, where if you do believe that the return you filed was accurate, you have to send the IRS a letter explaining why, and you have to do it in appropriate time within 30 days. This one is the sign that an audit could be on the way. So you have to be very, very careful if you ever receive any of these letters. And all these letters, everything can be avoided simply by making sure that the 1099-K is, in the first place, accurate when you get it from PayPal. Second, the gross revenue that you report in your Schedule C is equal to or over what the 1099-K says. So be vigilant in your numbers, and you won't have to deal with these letters. So now let's shift gears a little bit. I think we have a good sense of how to calculate revenue, how to then remove your COGS and that in your Schedule C in order to reflect the most accurate profit amount for your taxes. Sales tax is something, as you know, in the recent years has become a big thing for online sellers. And it's been a difficult and confusing topic. So how do you decide for which states are you going to collect sales tax? Straightforward. It's where you have a nexus. What is a nexus? Nexus is where you have a physical location. So this is where you live, your house or office. If you're going somewhere, for example, for like trade shows where you also sell stuff, that counts. If you have any contract employees or locations, that as well. In some situations, if you're buying goods from a state and then selling, then that might apply. These are more details which you will have to look into. One thing to keep in mind as eBay sellers, this is more related to sales tax, is more connected to where you are at, right? However, if you're selling on other networks such as Amazon, then it gets kind of complicated, because if you're participating in the FBA, which is fulfillment by Amazon, then you have to actually think through, where does Amazon have a warehouse? Realistically, it's pretty much every state. So depending on the nuances of your business is how you will see what all customers should be collecting sales tax from. That is just the first step. The next step really is that once you've determined which states that you will be collecting sales tax for, you should go to each state's requirements docs and check what are their rules. Every state has their own, unfortunately. Their rates might be different, the items that are exempt different, and mostly they have different rules on how you should sort of register with them, collect the sales tax, and remit it. So this is a little bit of an exercise which it is best to go through as soon as you can, so you can rest at ease that you're doing the right thing in terms of collecting the sales tax, which is required by law. So that's sales tax for you. Once you've figured all that out, you want to collect it. eBay will collect it for free for you. You can look in their help docs for more information. Amazon, if in case you sell there, they do it as well, but they'll charge you something. Now, a third option which you can consider is that just bake it into the price, which means you don't really have a separate section, but you sort of accounted for it. So as a result, you are able to just sort of take that out of the price, the final price that you charge a customer. This might be something that works for the type of products you sell and just the nature of the people who tend to buy from you. So which is the best for you depends on your customers, and if they're sensitive to the fact that they see a sales tax amount there, and that impacts their decisions. So think that through, but one of these ways should work for you in terms of collecting. Once you've collected, then you need to remit, which means you keep track record of how much sales tax you collected by state, and then you send it off to those states to give them what is owed them. Again, here exactly what the details are will depend state by state, but you already did that research, so you will know what to do. Doing this is easy, but what is also, well, not easy, but straightforward. But what you really need to keep in mind as well is that you have to record all this collection of sales tax as well as sending it off in your bookkeeping as well. So again, depends on your method of bookkeeping. You can keep track of it. If you use an online solution such as GoDaddy Online Bookkeeping, it does this for you automatically. Online bookkeeping from GoDaddy actually also tells you sales by state and has a lot of detailed reporting on this, which can make your life a lot easier. Now that we've gone through sales tax, let's briefly touch upon use tax. Use tax can be considered as the opposite of sales tax. So as a customer, if you purchase an item in another state from where you live and don't have to pay taxes on it, sales tax on it, then you owe an excise tax called use tax. So as I said, it's sort of the flip of the sales tax. If this purchase is a business one, so for example, as an eBay seller, if you went shopping in Kansas and for your inventory, then you don't need to pay use tax. In that case, you will give the seller a resale certificate and resale number, which you can look up to figure out what it is. And then you don't have to pay this use tax, because use tax is for like personal usage, not for inventory and things like that. So this is something just to know. Hope as long as you have your resale certificate and number, you're not liable to be paying use tax and you're safe. So we already covered a little bit of the rules around sales tax, but when you're doing drop shipping or consignment, things change a little bit. And they don't change exactly, but they just become a little complicated, and you need to just keep track of that. Now, drop shipping, as we discussed, usually it's when people are doing fulfillment by Amazon. But of course, people sometimes have smaller networks that they might be participating in, or they might just be doing consignment work. So again, nexus applies here as well. Nexus, as we discussed, is the physical location where you have a physical state where you have a presence, right? So this applies for sales tax for these drop shipping and consignment sales as well. You have a nexus wherever your drop shipper or consigner is located. That's why I was giving the example where if you're doing Amazon FBA, Amazon's your drop shipper, and Amazon has warehouses pretty much in every state, which makes you have nexus in all of those states. Specifically about Amazon, by the way, you can go online and see Amazon lists all the states which they have warehouses in, so you know exactly which one it is. Who knows, maybe it's 48 out of the 50 and not 50. So just want to make sure. So that's kind of the big rule here. Anywhere where your consigner or dropshipper is located, you're located, and you got to collect sales tax for that. Here's a simple example. If you live in New York and you dropship for a company that's in Ohio, and that company has locations in Ohio and Iowa, then you'll pay the New York sales tax when a New York person buys. And when we say pay, we mean obviously collect from the customer and then remit to the New York state. Keep that in mind. But yeah, you'll collect and remit New York sales tax when a New York customer buys from you. You'll collect and remit Ohio sales tax when somebody from Ohio buys, and same applies for Iowa. So as always, it's the same rules as the normal sales tax, except it just expands a little bit. Something you need to make sure of is that when you get into a partnership with someone to drop ship or do consignment, you need to know by contract that you will be told where all the locations are, because you can't guess this stuff and you don't want to be held liable for it. So that's critical. Then also, just for your customers, if they're doing buy it now or winning bid on eBay, you just want to make sure that they are aware that there'll be sales tax added. You usually do it through a form, and to get the right forms, you can check out Cliff Anico's best-selling book, which is called eBay Sellers Tax and Legal Answer Book. It has like example forms you can use just to make sure that the customers who are from states where you need to be collecting sales tax know exactly what's going on, because an informed customer is a happy customer. So those are some details on drop shipping and consignment sales. Of course, this is a complicated topic, and there might be nuances, etc., that you want to look into to make sure you're on the right side of the law. But this is a good starting point to know how to think about drop shipping and consignment and how it impacts your taxes. So now that we've gone over all these different things about tax time and how the eBay seller is impacted by them, how to calculate your income, your profit by taking away COGS and deductions, etc., it's obviously a somewhat tedious process. The best thing you can do for yourself is make it easier, and so that you can spend more time, focusing on buying new inventory, on selling more on eBay, just doing the things that make you money. How should you do that? We highly recommend utilizing an online solution, just because that will automate all this income tracking and expense tracking for you. Our product, as we discussed in the beginning of the presentation, was called Outright before. Heard of it. Now we've been bought by GoDaddy and we're called GoDaddy Online Bookkeeping. But in your eBay App Store, you will find us as Outright like before. You can go there and get started. And if you go through the eBay App Store, it's very easy for you to go from your eBay account into with Outright. It's very seamlessly linked. The way it will help is it just tells you profit and loss at a glance. So things you were going to probably enter into a spreadsheet, think through 100 years, and then arrive at is right here for you. The way it works is that you connect all your financial accounts. So PayPal being the first one, given that you're an eBay seller, your bank account or your credit card as well, so that we have the income side of things and also the expense side of things. Once we have those, the GoDaddy Online Bookkeeping actually automatically categorizes those into IRS approved categories for your Schedule C. All you'll need to do is just check in once in a while if there is an uncategorized expense. As you see in this screenshot here on the left, it says uncategorized expenses. So let's say we have 5. Let's say this number was 5. It would mean that the system couldn't figure out which category those 5 fall under, and you just need to help it once. Once you tell it, it'll remember. So this is vastly different from managing your own books with pen and paper or spreadsheets. Also, compared to all the other online bookkeeping solutions out there, GoDaddy Online Bookkeeping has the best-in-class PayPal and eBay integration, so you cannot go wrong with this. Once you have this set up, what you will see is it actually auto-populates your Schedule C for you. Now that's amazing, right? Because all you need to do is make sure that all that discussion we had about the 1099K number being reflected accurately in number 1, which is gross receipts or sales. As we said, it should be equal to or more than the 1099K number. And you can check within this platform what the PayPal numbers are, just to double check. And literally, you're good to go. You just glance over, either take it directly to the tax man or show it to your accountant. If you have an accountant, they're probably going to be really pleased with you if you bring this already done, because instead of going through your shoe boxes, all they need to do is check if this is accurate and send it off. And it's a win-win for you both, because for you, you have to pay less to the accountant too. So that is the product which we think you can really help you in terms of your tax time. Regardless of how you end up doing them, we hope that this information was useful for you. If you want to see more about GoDaddy Online Bookkeeping, you just need to go to your eBay apps, and you will find Outright there, and that's where you can go from. It's a simple product for the easy price of $9.99 a month, or a deal at $99 a year. And most of the serious eBay sellers we actually have on our system just go for the annual because it's just easier. But yeah, so for that price, you can take away all the hassle of taxes, and hopefully this information has been useful to you, and tax time will be a little easier this year.
Well, that was awesome. In spite of all the tech glitches, I'm so proud of you guys. We all must be like supernatural beings. I heard that anytime they're around technology, it just acts up. So with all 4 of us together, it just couldn't handle us. That's all.
But we got it, and so now we have the questions. But one of the first things, and it was funny, I was muted because I was trying to interrupt you. One of the things that gets very confusing is Nexus versus marketplace seller versus sales tax and all of that. Because one of the first questions you were talking about Nexus is somebody was saying, I thought that hasn't passed yet. Can you explain some of the differences between what marketplace fairness is that they're trying to pass in Congress and Nexus?
Great question.
I stumped them, or we lost them.
Or we lost them. There they are.
So this the Nexus question is really critical because some states on their own have passed their sales tax laws, right? So you have to abide by those. The Nexus thing is separate from the Marketplace Fairness Act, because what the Marketplace Fairness Act was trying to do is actually kind of standardize this a little bit across states. The Nexus thing has been around for a longer period of time, and it will apply even now. To the best of my knowledge, Marketplace Fairness Act has not been passed yet. However, there's a difference. Like, just because that's not been passed doesn't mean you don't have to worry about nexus and sales tax. Does that help?
Yeah, because Nexus is basically wherever you have physical inventory, whereas the Marketplace Fairness Act is going to be you have to collect sales tax for everybody no matter where they live.
Yeah, it's trying to simplify the sales tax laws, which it depends on how you look at it, can be good or bad. But Nexus is a completely separate thing.
Right, and Nexus is not a new thing. A lot of people seem to think that that's a new Marketplace Fairness Act and Nexus are intertwined because it's new. Nexus has been around for a very long time. It's just that the states are now paying more attention to it, it seems. Is that what you guys are seeing?
Yes, definitely, exactly. Like, 5 years ago when this whole then people weren't as aware of how amazing all the eBay sellers out there are, nobody noticed. But now, because there's been this scrutiny, particularly because of the big success of, like, eBay, Amazon, these big companies now, everyone's sort of paying attention, and the IRS is almost compelled to pay attention. So it's best to make sure that everything is in order on that one.
And I think a lot of it too is people don't realize there's use tax in the States. So technically, if you buy something from out of state, you're supposed to pay sales tax on it anyways in a lot of states. I know Massachusetts has that.
Exactly.
But those are such
tax, yeah.
Right, those are such underused things that now they're going more for the Nexus and the Marketplace Fairness to get that money.
Yeah.
Okay, you guys ready for these questions? Kat, can you start watching now?
Yeah, I will. I was thinking that this is such a great topic, and you actually covered like 3 different kinds of taxes. We could be here the rest of the day, and I know that's just not possible. So I think we should set some expectations. We're going to do the best we can, and as someone in the question box just posted, thank you, question person, you're great. Yes, Karen is awesome at, kind of grabbing all the questions and putting them into bundles together, but there is no way we can cover all of these questions. I would say we've got 45 minutes or so if the ladies are able to stay that long. So we're going to do the best we can, and if we can't get the question answered here, we will try to send it to Laura and Priyanka, and perhaps in a GoDaddy blog or another PDF or something, we can get some other answers for you.
Right.
I just don't think we can cover everything while we're right here live.
Yeah, that's exactly right. And so we'll absolutely, if there's something that we want to dig into a little bit more, we can do a blog post on it. If you're right, we could spend a whole nother hour talking about sales tax as its own webinar. So yeah, let's definitely answer what we can, but then know that we can absolutely do some follow-ups because we know that these are really they're really hard and complex topics. And so we certainly don't want to short shift them in any way, but we also want to make sure that we can get the valuable information to as many people as possible.
Well, I trust Karen to put them all into buckets, but I just want to make sure everybody knew that she's doing a great job, but we can't get them all. Okay, I'll be quiet now, Karen.
Not a problem, Kat. No, the biggest thing is that there seems to be 2 chunks. So one is mileage and one is cost of goods inventory, which is always a question. It's always. So I'm going to start with mileage because that tends to be a little more straightforward, and then we'll hit the COGS and inventory. And then Kat's going to start paying attention to all these questions coming in while I'm asking the other ones. Okay, so one of the first questions is, if somebody goes from yard sale to yard sale, we have a person here who hits like 30 to 40 yard sales a day. How do they correctly record that mileage?
Yep, so that's a great question. So that mileage is absolutely mileage that somebody should be deducting. I think you can do it probably in one of 2 ways. Well, probably the best way to do it, and again, thinking about the IRS wants pretty detailed logs if you're going to take a deduction. So what you really should do is at the beginning of your trip when you leave home, you note the mileage, and then at each trip you can jot down the location and the number of miles driven. And again, it is certainly it can be a tedious task, but that is something that you would definitely want to do.
And it could be easier if you use some online solution for it. So if there are lots of apps out there that will help you track your mileage, mobile apps, and the GoDaddy Online Bookkeeping app actually also does that for you, and we hear from our users that it makes it a lot easier. because you record it right there, and you just need to then you just forget about it. It's in your books.
Okay.
Do keep a log. That's the key.
And then you can do either of the 56.5 cents per mile, or you do the actual vehicle expense, which might be a little hassle given all these many stops they're making.
Okay, and then the other one is, if you add all the trips into outright, can you print that and use that as a log, or do they need to actually have the actual start and finish mileage?
They don't need to have the actual start and finish mileage. I think so it's a good idea at the beginning of the year to, on January 1st to mark your odometer. And then I think at the end of the year, it's a good idea to, mark your odometer at the end of the year as well. But you don't need to track your odometer for your mileage log for each trip. Okay. Yes, and you can use your GoDaddy Online Bookkeeping to track your mileage, and it will track the number of miles and the purpose of the trip. So you absolutely can use that as your log to track.
Okay. Another question, let me see. Currently they keep the receipts and then put the mileage in GoDaddy. So basically that's good enough for what they do at this point, right?
I think when they say keep their receipts,
they keep the receipts, then they put the mileage, so they know what they've bought, and then they keep their mileage in GoDaddy, so the dates and the address of everything of where they're going matches up.
Oh, right. I think the one important thing you'd want to make sure that the number of miles, the trip miles, are on each of those receipts.
Okay.
Right. So that would be the thing. So the key things that you have to track is a date is probably on the receipt. You want to capture the trip miles and then the location that you were at, and obviously the purpose of the trip would be, sourcing or inventory.
Okay. And then, go ahead.
I was just going to say that another thing is that what they can do is through the mobile app take a picture of that receipt and attach it to that mileage thing, so that it's all in one place in GoDaddy Online Bookkeeping as well. Just organizationally, it can make things easier.
Okay, and then somebody who hasn't kept track of their miles, can they recreate the log from the receipts if they were out buying inventory, if they actually know how many miles it was to those places?
Technically, the IRS, one of the requirements that the IRS has is that and again, this is where it's like you sort of have to use your good faith judgment here. So the IRS says you have to manage your mileage log in a timely manner. So by timely manner, they mean that you can't wait until the end of the year and then, sort of list every trip from January through December. They don't like that. They like you to keep it in a timely manner. So again, I always feel like this is like the good faith, good intention here, where what timely manner means to you, you kind of have to use your personal gauge. Yeah. I think the one thing that we would definitely say is it's certainly easier to stay on top of things literally in a timely manner versus building everything up, no matter what it is, until once you've got piles or months into something. Then it just really becomes overwhelming.
Which is what we're all doing now for 2013 taxes. So we're all at this point, we're all swearing, I'm not going to do this next year. Can we throw a Cliffism out there? Can we remind them that Cliff always says, even the IRS is like a dog. Even a dog knows if it's being tripped over or kicked. So the intention there.
That's right. So
a Cliff
yeah.
See, Kat, thanks to GoDaddy Bookkeeping, my taxes are done, sent in, and I have my money back already.
Awesome.
While you're on the, that's great. While you're on the mileage, I'm going to throw one in that came in later because it's right in your topic, Karen. This is from Laura. It says, what kind of mileage log is the IRS going to ask for if I am audited?
So basically, the mileage log is basically the detailed records, which include the date, the trip miles, the address location, and the purpose of the trip. Those are the 4 things that you need to keep track of in a detailed mileage log. and again, depending on, it's really about what's most convenient for you, how you want to do it, whether you do it with a mobile app tracker. They sell mileage logs at, any office supply store that, has the graphs sort of built in. You throw it in your glove box if that's the easiest way for you. I think the main thing is you want to adopt something that that works for you and that you're going to stick with consistently.
Okay, now I have a question that is a timely one, and I'm going to ask it now. If they signed up for GoDaddy software now, can it import all of their activity for eBay for 2013?
Yes.
Okay.
Excellent. That was a good, quick answer. And one more mileage question. One more mileage question while we're still here from Maria. I was told that we could start from home for each garage sale, not from stop to stop along the way. So is that the way they're, instead of a round trip, they're talking about going to this garage sale, going home, going to that garage sale, going home, which would increase your mileage exponentially. I'm thinking that would be a no-no. What are you thinking, ladies?
That's actually, you're right. So, and I think about it like this, right? Whenever something like that comes up, this is what I always say. If I had to explain this to the IRS, could I, with a straight face and in good faith, explain this?
Yes, exactly.
That's the sort of personal parameter kind of thing. Yeah. So at the end of the day, you literally were deducting more miles, than you were needing for your trip.
Yeah. There's a lot of the discussion is documentation rather is around round trip mileage, which is probably the reason this confusion comes up. But yes, you can't double count. Shouldn't double count.
Okay. So now because there's so many questions, and I know some people are leaving early because eBay has a webinar at the same time, or starting in 2 minutes, so we need to. I'm going to hit the inventory cost of goods stuff. So one of the first questions that came in was, could or will outright be adding a cost of inventory purchased as an expense?
Oh, you mean as a transaction in the program itself?
Originally they were talking about as an expense, and so I kind of answered them that it's not an expense until it sells. But they actually.
So I think I get the question here. So within the online bookkeeping app, there is a category cost of goods sold that is that's not expenses. It doesn't show up in expenses. It's literally cost of goods sold. So you categorize your inventory purchase under cost of goods sold. And at the end of the year, one of the things that you can do in that example I showed where you had $25 left that you couldn't deduct, within the online bookkeeping app, you would literally enter in a negative transaction categorized as cost of goods sold, and it would pull it out of that for you.
Okay, and one of the people is saying that their purchases now come through as an uncategorized expense. So how would they go about changing that to have it categorized?
This is a little bit of a tricky one. So depending on, so you could go back in and manually categorize it as cost of goods sold, obviously if it comes in as uncategorized. If you purchase from the same vendor a lot, then once you recategorize that first one, it will ask you, do you want to recategorize all transactions from this vendor as cost of goods sold? And you could say yes if you purchase often from that particular vendor.
Okay.
And even for us, so sometimes it's like, okay, the purchase, for example, was $100 for 100 widgets, but only 75 got sold. So later you can reconcile, but by just entering manually like a minus $25 COGS entry into the outright / GoDaddy Online Bookkeeping, so it stays reconciled. Because with COGS, there's always this concern, right, that you buy at a certain time and then you sell later, and later is only when you know, was it COGS or was it not? So at the end of the year, you can reconcile with one manual transaction.
And Priyanka, just a question, but I use TurboTax, which is like, it integrates with Outright and QuickBooks and all of that. They always ask for a beginning and a year-end inventory. Isn't that what that calculation is for, to help you with? Because people are kind of panicking about how am I supposed to know?
Right.
Exactly.
That's exactly right.
So at the beginning, that's why it's so important that on December 31st, you take a year-end inventory. If you're an Amazon FBA seller, if you're an eBay seller, whatever it is, you need to know how much your inventory is worth on December 31st. And that's
Right.
where that how do I write that off comes in. The tax programs that you use or your CPA will use that information to help you, right?
That's exactly right. Right. That's why it is important to do it at the beginning and the end of every year. Right. Because otherwise you're sort of you sort of can't really do your COGS start and stop if you don't right? You don't know what to put in those line items.
Right.
Right. Because you don't know what you've sold until December 31st.
Exactly. Right. Right.
Exactly. Okay,
that's why they're so confused.
It's very confusing because to us inventory is an expense. We're going out, we're spending money to buy this stuff.
Right.
But to the IRS, and I think that's where the confusion comes in. I mean, to us, like I said, it is an expense. We're taking our money and we're buying this inventory. But to the IRS, it's not an expense at that point. It's not until you actually sell it.
And the logic in thinking about it is you're right. Like it is, I'm spending money that I'm going to purchase something and resell it. So it's really just a sort of it's a sort of technical term that you just need to understand and be aware of, that COGS is different than an expense.
Okay. So let me see if there's any more on this. Oh, so there's a request if GoDaddy could add an inventory field for purchase costs that would be helpful when using the cost method of doing year-end inventory. So that's something to just stick in your.
Some good feedback. Yep.
Yeah.
Here's another one, Karen, about the mileage sort of. Scotty Walker would like to know if you have one vehicle that you use only for business, you have another personal vehicle and this vehicle is strictly business, are the mileage requirements or anything different for that vehicle?
They're not, the tracking mileage is not different, but if you, so the tracking mileage requirements are not different. But if you have a vehicle that you only use for business, you might consider doing the standard deduction of just the maintenance and repairs fees and all of that versus the mileage deduction, right? Because in that case, if you're only using it for business, you probably come out on top because you'd be able to deduct your gas, any maintenance, any repairs. So in that case, if you have a vehicle that you only use for business, I'd consider doing the standard deduction, which is not the mileage deduction.
Thank you.
Okay. I'm going to ask this one because it just popped up and it goes along with where we are now. What if you resell items from your home you no longer have use for, things you've already purchased and paid sales tax on? Is that still income, meaning the profit you make from it?
Yes, it is. Yep. Anything that you sell and you get money for is considered income.
Yeah.
And that goes along with Lynn's earlier question, how do I handle depreciation for something I purchased years ago and don't even remember what I paid for it?
Yeah, this is a tough one, right? So this comes up often because you sell stuff,
eBay.
right, exactly, that you don't have use for, but somebody else might have. And so to assess a value on some of those things, a good starting place is the IRS has some information on how you start assessing the value, and it also comes into play when you think about charitable donations, so stuff that you donate. When you think about assessing the value, you have to consider things like what would somebody be willing to pay for it today. You have to consider things like its condition. So this is a tricky one, and the IRS does have some guidelines around it, but it's definitely a tricky one.
Awesome.
Okay. Here's one for you, and this affects both Kat and I. Can you use the business office exemption if you are renting?
Yes.
Yes.
Awesome, and it's done the same way as if you were owning. I have a couple people asking that. Thank you.
Yes, absolutely.
Okay, here's another one. Is it legal to not charge sales tax on your purchase and then you just turn around and pay it yourself?
Yes, that's something we covered, right? That you can bake it into the price.
I think they were concerned because they've heard bits and pieces in the past about how it's not legal to over-collect. I've heard people talking a lot about this because some of the settings on Amazon and eBay make it difficult to collect the exact right amount of sales tax. because of counties and cities and all of that issue. So
Right.
some people are choosing to collect a little bit more just to make sure they're covered, and that is technically not legal
That
to
is
collect
not,
more sales
yes.
tax. Right.
Yeah.
So
if you
I
do
think that's
place it in, yeah, you've got to make sure that you are collecting exactly the right amount. So, Kat, you're absolutely right. That could be big trouble if you're over collecting sales tax.
I think that's where that question came from. They know they can't collect over, so they're leery about not collecting at all. But, you know, the states don't really care where the money comes from, you or your customers. You obviously should care.
Yeah.
That's right.
But again, if you can't get it exactly right, you have to veer on the side of getting it a little bit less.
Under.
Just
that's right.
under, yeah.
And that's one of the places that eBay makes it tough, because you can only
Yes.
pick one setting per state. So I would pick the lowest setting for that state so that you're not over collecting.
Over collecting. Yeah, this is a major issue that is going to continue to impact online sellers, and it's going to take them a while to resolve it. And in the meantime, it's unfortunate that the online sellers have to sort of suffer through some of this really tedious, confusing pieces of trying to do good and do right.
Especially for the smaller sellers that don't have a team of accountants to do their numbers for them.
That's why we have GoDaddy Online Bookkeeping, thank goodness.
Exactly.
Do everything you can to make it easy.
Another question is, as for the home office deduction, now that we've asked that question, now more questions coming in about it. What if you don't pay any rent? Can you still or rent or mortgage on that? Can you still take a home office deduction?
If you
So like you own your home outright and you have a home office, can you still take a deduction?
If you own your home outright, can you still take a deduction? That is a good question.
Well, couldn't you deduct still a portion of like the electric and all those other things you pay?
There's something in the tax law about the home office deduction, and when you resell your home, you're going to need to talk to a real estate attorney on that, I'm thinking. But there's something about the home office deduction and the resale value of your home. I'll stand at that.
Well, and but now she's saying, okay, this particular person doesn't pay rent and doesn't own a home, but wants to know if she can take the home office deduction.
That's a good. Let us do a follow up on that one, because I want to make sure that we give the right information on that one.
That's
I'm not 100% sure.
Question. Yeah.
Okay, so I want to go back to retirement before I go to the sales tax questions, because those always get complicated too. If you're over 66 and not collecting Social Security yet, should they still be contributing to a retirement fund?
Meaning, is there any reason why they can't?
Yeah.
I don't think there's any reason why somebody can't contribute. I think it's just sort of about how much. I mean, I guess at a certain age you want to figure out, and this is again like financial planner situation, but I think you want to figure out how much money you need and you want to have immediate access to versus sort of planning for the quote longer term. So I think that's more of a personal question.
Okay.
But there's no reason why you can't.
Okay. And we have a second person who is already collecting Social Security and wants to know if they can still contribute to a retirement plan.
If you're already collecting Social Security, can you contribute to a retirement plan? I believe the answer is yes.
Yes.
Okay.
I'm 80% sure on that one, but again, we can do that as a follow-up.
Excellent.
Okay, yeah, because I mean, a perfect example I could say is like my husband, who's only in his 40s, but he collects Social Security because he's disabled. So technically, we could put some of that money still because he's not of retirement age.
That's right. Yeah. So that's right.
Okay. Here's another one, but Kat just answered it, but I'll ask it out loud. The home office deduction is only allowed when you use that room 100% for your business. Is that correct?
Not 100.
Oh yeah. Oh, sorry, Kat. I thought you were answering. Okay, no. So if you have a room in your house that you use as a guest room and a home office, again, you have to follow the one you use it regularly and exclusively as a home office. So if you have bed in there, you cannot deduct the whole square footage of the room, right? Because you don't use the whole room for your home office. So you have to basically divide the square footage and say I used X% for my home office exclusively and regularly, which is not the full per square footage of the room.
Well, I know for me, my home office, which is my desk, besides my storage downstairs, is in my breakfast room. So I measured out the space of my desk and my chair.
That's exactly right.
And also, folks, one thing that people tend to forget on this home office deduction, it also includes storage space. So if you use your little breakfast nook, Karen, for that, but you also have a bunch of inventory stored in your basement, the square footage of your basement that you use also is included in that home office deduction. Is that correct, Laura and Priyanka?
That's correct. Yeah, that's absolutely correct. And that's a scenario where if you have that scenario, then you actually do not, you basically, if it's over 300 feet, then you're not going to use the simple new home office deduction.
Yeah,
right?
I just use the simple.
So in other words, if you use your breakfast nook and that's 10 by 10, and then you use a section in your basement that's 10 by 10, you add those two numbers together, folks, and that's the percentage of your home.
Right.
That's right.
All righty. All right.
People forget all the closets they have eBay stuff stored in.
Yeah. All right. One of the questions was, how do you get a resale certificate number? And I think that depends upon the state, doesn't it?
IRS.gov?
No, it's state.
Oh, state.
Oh, right, from your local state on how you get use tax or reseller. Yep, go to your state website.
Yeah, the links most of those links are on the Outright blog. Outright.com/blog has a lot of links to the different state sales tax departments. It's very, very helpful. You guys really should bookmark it. Outright.com/blog.
I told them to Google their State Department of Revenue. And some states like New Hampshire that doesn't collect sales tax will not issue a reseller certificate. So I don't know how they work wholesale business in that case, but
I'd like to just mention one thing about the whole home office deduction in case somebody owns their home completely and it's paid off. Just following up on that. And just wanted to say that just based on what the documentation says, it seems like if you don't have a mortgage, the part that you're deducting really is going to be towards, first of all, expenses such as utilities and all that, but also like depreciation.
Okay.
So those are the ways to deduct it.
Thanks for looking that up, Priyanka.
Yeah,
because I know.
Kat, you were exactly right.
Yep.
Oh, I like being right.
Hey, cool.
You're very smart.
Okay, let's see, where are we now?
Now my head's swelling. Next.
Yeah, we don't need that. Okay, let's see.
D'Anthony has a good question about mileage if you want to go back there. If I'm on a long trip sourcing and I'm away from home, can I deduct a lunch with my employees while I'm outsourcing?
Absolutely.
Yes.
Absolutely.
So what is the rule about that? I've had different people ask that question in different ways. When can I deduct a lunch while I'm out away from my home working? If I'm within 5 miles, I'm supposed to come home and eat. If I'm 10, what is the actual rule on that? Just
yeah. This goes back to the sort of ordinary and necessary piece, right? So if you're out and you're with your employees or you're meeting a potential client or a sourcer and you're meeting for lunch, you're absolutely allowed to deduct that in terms of this was a business lunch that you had. It's part of you doing business. I think where it gets tricky is when you're mixing both personal and business, right? Like you can't deduct the entire trip if you do some personal things on that trip. You can only deduct the percentage of that you were using for business.
Okay.
Excellent.
I'm going to hit some sales tax questions real quick, and then there's a couple more that came in that look like they're pretty good ones to cover. Let's see, where is it? Here's one. What if you have two different drop shippers, for example, one in New York and one in Colorado? If a New York customer buys from the New York drop shipper, then sales tax is collected. What if the New York buyer buys the item from the Colorado drop shipper?
So you have nexus in all these places, but sorry, actually, I can confirm this. Just give me a second.
I would think that they would have to collect it in all of it because they now have nexus because of the drop shippers, but that's just my inexpert opinion.
Yeah, it just depends on where the buyer is. So if someone's buying from if you, for example, you said Colorado, right? So if the if the resident of Colorado buys, it doesn't matter which one they buy from, you would just be collecting the Colorado sales tax. So it,
Okay.
yeah.
Right.
Because
So
as an entity, you have nexus everywhere.
So because you have Nexus, and that's the other thing that's hard for some people to understand too. If you use Amazon FBA and have Nexus in their warehouses, then also all your eBay sales, you have Nexus in all those same states. It's not just depending upon what platform you're selling it from.
Right, because as a business, you have it everywhere.
Okay. Someone else put in, it's my understanding that if your business makes less than $10 million, that you do not have to collect individual state sales tax except in the state where you are located. Is this true?
So, can you quickly repeat the question, please?
Sure. It is my understanding that if your business makes less than $10 million, that you do not have to collect individual state sales tax except in the state where you are located. Is this true? I think that's marketplace fairness.
That's where the 10 million
Yeah,
came
no, that's
from.
separate.
Yeah, I don't.
Never
I'm
heard
not
that
sure
one.
about that one. Like,
But
there's an income threshold that says whether you have to collect or not. I'm not sure. Again, let us get back on that one. I just want to make sure that we give people the right information.
Well, and I think that some of that is pulled from the marketplace fairness, and then but you've also got Nexus involved in that particular question because
it doesn't. Yeah.
Right, exactly. So and that's one of the things I'm finding whenever I'm talking with sellers is marketplace fairness versus your own home state versus Nexus gets very confusing. Everybody hears about Marketplace Fairness Act, so they think, oh, it hasn't passed yet, I don't have to worry about it, not realizing that Nexus is a rule that's been on the books for a long, long time.
Right, they're not mutually exclusive. Right.
But
Nexus exists, and like it doesn't matter whether the Marketplace Fairness Act's been passed or not.
That's right.
Just like the only change Nexus rules will only change slightly once the act passes, but for now, Nexus is applying alive and well.
So basically, if you are in a state, the easiest way to boil this down, right now, without marketplace fairness, if you live in a state and sell to someone in your state, if your state has sales tax, you have to pay sales tax to that. You have to collect sales tax on that item or pay it to the state.
That's right.
If your inventory is coming from another state, like a drop shipper or a warehouse, and that state has sales tax and you sell to that state, you have Nexus, you also have to collect sales tax for that state.
Exactly.
Is that the easiest? Right. Okay. I'm trying to boil it down really clearly because it's very confusing. I mean, it's a very confusing thing. And I mean, I know one of the things that I ran into because I had a person who lives in New Hampshire, which is the next state to me, that does not collect sales tax. And New Hampshire and Massachusetts have a war over sales tax because lots of us who live close to New Hampshire go shopping in New Hampshire. And so New Hampshire doesn't want you to collect sales tax for any other state. And Massachusetts wants you to collect information so that they can get it from the people that are buying it from Massachusetts and New Hampshire. So there's all these laws going back and forth. You can't collect sales tax. I mean, and that happens between the border states that there's no sales tax. So it gets really confusing.
Really fast.
Really fast, yeah. I mean, New Hampshire actually has a law that you cannot collect sales tax for other states. So businesses that are in New Hampshire, it's tricky for them because with Nexus rules and FBA, what do? Whose law supersedes whose?
Whose law is the supreme law?
Exactly. That's why my friend who was in New Hampshire stopped FBA because it was too confusing. Let's see. I think that I have covered all of the big questions because
I think you did a great job. I think
those
you did.
kind of things.
Yeah, we're never going to answer them all, but I think Laura and Priyanka have a lot of homework.
Yes.
And I think we really want to thank you, ladies, because these questions are from people's hearts and their businesses, and they want to do the right thing. And you're helping with that. We really appreciate it.
Kat, I found two more that are really, they just came in that are really good to cover.
Awesome. Go for it.
If I build a storage building office on my land, can I use the cost of building towards the business towards the business office deduction for the year that I billed it in. Do you need me to repeat that?
Yes.
Okay.
Yes, you can. If you use it exclusively if you're using it exclusively for business storage, yes. There might be something in that that I would check about. Is it a capital expense versus just a regular expense, right? So
yeah.
Capital expense is more things like equipment and that type of stuff. So there may be something in there where it might be considered a capital expense.
And that was something I was gonna ask, because doesn't something that large of an expense have like depreciation and you have to put it out over years and all that stuff?
Yep, that's right. Right.
Okay. And then the last question is, on the 1099-K, what is an easy way to figure out the amount of shipping that is included in that total? Or is it better to figure actual shipping charges paid and deduct it for the total to get actual income? Did you get that?
That's a funny question, because it really all depends on how you've kept track of your shipping. Right? So throughout the year, you have to have had a way to keep track of all of your shipping costs.
Yep.
And then you will have a total, and then you would be able to deduct that total and say, okay, here's my one big total for shipping costs that I'm going to deduct. If you haven't been keeping track of your shipping costs in a detailed way, that's going to be incredibly painful. But what you could do is you could because so this is a perfect suggestion of where something like Outright or GoDaddy Online Bookkeeping now can help you. So if you import your data for all of 2013, your shipping costs will be in there and categorized, so you will know.
I actually, just to give you an example, I use stamps.com, and I have whenever I make a purchase for postage, it's automatically coded as shipping costs into my Outright. I made my own category so that I can pull that out exactly.
Yep, because I don't know how else somebody would figure that out.
You can go into, if you buy your postage through PayPal for eBay, you can go into a PayPal report and you can request activity that affects balance, and it will show shipping. You can pull it out that way too.
As one lump sum. Okay, that's great. Yep.
Yep, and you'll get a spreadsheet downloaded, and then you can just total up all the columns, and it'll work out that way. Another question which I missed way back in the beginning, people that do consignment, is it when they get the item for consignment, is it inventory or is it accounts payable when they pay them their share less their fee?
Oh, this is a tough one. Ask that again.
Okay.
Can you repeat that one?
Yeah, if you're a lot of eBay sellers are consignment people.
Yep.
Is the item they get for consignment, I'm rephrasing it now, inventory, or is it an expense when they actually sell the item? What they pay, the fee.
Yep.
Not any easier that way, is it?
Well,
it's so many
basically
options.
The goods held in consignment are considered inventory until they are sold, and once they are sold, then it
then it becomes part of your cost of goods.
Yeah, see, the way I looked at it, and I could be wrong, that's why I'm asking it, is you don't actually own it, so technically it's not your inventory. You don't own it, but when you sell it, what you pay them is a cost of goods sold because it's an expense out of the profit.
Yeah.
Or is it?
Yeah.
Yeah.
Let us
that's a whole blog post right there.
That is a whole blog post,
yeah,
right?
Because there's a couple questions about that, about how to keep track. All I can say to people who are doing consignment is that you need to have a really good bookkeeping system. Number one, to make sure you're making any money, and that's a warning from somebody who's been there.
Yep.
And number two, to show the IRS that $1,000 that you got for that Cartier watch, or I don't know how much those things cost, $10,000 maybe, was not your income. You better have really good bookkeeping and backup for that kind of stuff.
Yeah,
exactly.
Yeah, absolutely, because you certainly don't want to be.
Right, because we have to remember that the IRS already knows your income now, that the 1099s and all that. They know how much money you got.
Yeah.
What you have to do is prove to them how much of that money wasn't really income. So
Well,
you
and
think of it that way.
And the burden is on you, the small business, the online seller,
Yes,
which, you know,
yes.
is the unfortunate part. But, you know, the burden is absolutely on you, the online seller, to.
yeah. Well, and
Karen,
the
they
other
want
thing
another
is,
spreadsheet.
I know I saw that, and I got one for inventory too. And the other thing I was going to say is, the other thing is make sure when you're paying these people that at the end of the year you issue a 1099 for what you sent them.
Yes.
Unless you
That's
sent it
right.
through PayPal and it comes in their 1099K.
Sandy Garcia is on, and she does a lot of consignment. She says she books it as a consignment commission paid expense when she pays the consignee. I can't put it into inventory because the cost is zero. And I don't know if Priyanka and Laura know, but Karen has created 2 or 3 spreadsheets for different selling situations because she's so good with Excel, and she markets those. And so people in the chat room are asking her to create a couple more spreadsheets for them.
I will work on it.
Fantastic.
Yeah, I just did a little bit of clarification, and the stuff I'm seeing here is that it's considered inventory for the consignor, not the consignee. And as you were saying, the expert consignor listener said, they record more of the, for themselves, they record the commission and approved expensive and remit the selling price back.
Awesome. Thank you so much for getting that clarified. And Sandy, we knew you knew what you were doing. Thank you, lady.
Okay. Now let me just get to this one real quick, because I have to disagree with this, I think. Consignment sounds like FBA, and any profits are the fees when working. I got to reread this here. Consignment sounds like Amazon FBA. In that case, that's not true, though, because you own the merchandise, so it's not a consignment. And any profits or fees when working as a percentage of the sale or cost to your co-signee. So the way he's talking about it, yes, you know, any fees are part of the expense, but with Amazon FBA, they're your expense. It's not. Yeah.
It's not someone else's inventory
Expense.
or someone else's that yours. Yeah, that is a difference.
Yeah, they are different. Okay, I think, Kat, did you have one last question you wanted to ask? Because we're right at the 2:30 mark.
Yes, we saved the last question for, like, they want to know if they have any special sample prices to try out GoDaddy Online Bookkeeping, or how do they sign up, and is there some kind of a free trial or a discount?
Yeah, so you can sign up through the eBay App Store. So if you go into your eBay App Store and you just search for Outright, you will find it in there. And there's actually a free version in there where you can basically link your PayPal and eBay accounts and your bank account and any credit cards. You can link all of your information in there. That's the free version. So you can pull everything in. You can see how it works. You can look at the reports. And then for the taxes portion that we talked about, the Schedule C and the estimated tax and sales tax, that's in the paid version, which is the $9.99 a month version. So you can absolutely get everything in there, see how it works, see what you like about it in the free version, and then once you are happy with that, then you can move up to the $9.99 a month and get all the taxes piece.
Fantastic. And the free version will also import their full 2013.
Absolutely.
Yes. Great.
Absolutely.
And for those of you, this is basically an eBay webinar, but we do have some Amazon sellers. Outright or GoDaddy Online Bookkeeping also imports your Amazon and actually makes it easy to understand. You guys will love it.
Right.
So
Yes.
again, thank you, ladies. Thank you, Laura. Thank you, Priyanka, for staying extra and trying your best with the questions. We'll get back with you if you have answers to those ones we were going to look up. And Priyanka, I love your fast fingers looking up all the information on the question ones. Thank you. We will have the ladies back because I know you guys have more questions, and I know that you appreciate. There's a lot of comments in the question box. Thank you. This was great. I really appreciate the info. Be sure you sign up for our webinar, our next webinar with John Lawson. It's not about likes, it's about sales, baby. You can sign up at pagemage.com/top-rated seller webinars. Thanks again to everybody, and we'll see you again next month on March 26th. Bye-bye.
Bye-bye.
Bye-bye.